Good afternoon, everyone. Just let me know if you're hearing the sound, all right? And then I'll be back in a few minutes. Should be get started in about 7 minutes. Welcome everyone to the weekly live stream. Really appreciate everybody joining us. We've got about getting close to 200 here, and we've got a lot to talk about today. Markets are selling off. You can see on the screen on the left. A couple things I want to talk about just before we get started today. One of the things I want to make sure happens. Last week there were a lot of chats going on the chat line that were not related to what I was talking about or asking questions about the markets. So please know we want to keep this to the markets. You know, we don't want to talk about cars or fish and chips or anything like that. There were people that wanted to get questions on, and there were segments of the timeline that were getting dominated. So just a little cleanup work. Let's do a lot of good work here today. I spend 2.5 hours with you folks every week like this, and I really enjoy it. So let's make it. It's hard for me to watch the timeline in front of me and be able to respond to people when I'm seeing things that aren't related when I look down. So, you know, we'll do our usual show as we do every week. I'll go through some analysis of the markets, what's going on right now, kind of update in between the lines, if you will, as far as the market commentary goes. That, you know, and I do in my anywhere from 15-minute videos, we'll call them. We'll go through a little more depth on that. There's certainly a lot of things going on. Angelo, thanks for the super chat. Really appreciate it. But we're going to get a lot of good work here done today. So buying puts on fish and chips. Thanks, Al. Appreciate it. But you guys get it. You know, I'm sitting here trying to do some quality work for you folks, and people listen to what I say. So it's pretty important. I don't want to be any more distracted than I need to. So you get it. So things going on. You know, we're still bumping. You know, let's start digging into the markets here. Let me go over to the primary screen here, and we're going to look at the E-minis. I'll go full screen so we can see this really good. But let's talk about what's going on here. Now we printed up to that 33.19 level, and I talked about this last night in the video. And I want to flop this over to the cash market here for a second, do a couple things, and bring up the market grid just so we can get some context. And so this is weekly. We'll get to daily here. So in the daily market grid, we printed 33.29 was R1. We didn't quite make it there. I think the futures did a little better job hitting the numbers. But as I mentioned, there's major resistance here at this 10-week moving average, 33.41. We'll see how we trade today from a closing standpoint. We're going to be hanging out until the close. So we'll definitely be getting a look at what could be setting up. Now, I mentioned also in last night's video that no bottom has been confirmed yet. We saw a bit of a reversal on the NASDAQ the other day. That's already starting to fade pretty quick and starting to fail. And I'll go through those details on the NASDAQ. So the plan is we'll go dig into depth, including going into the monthly level on the S&P. I'll hit the NASDAQ, and then we'll hit some of the things that are really going on out there. As I mentioned in last night's video, I think the biggest thing going on out there is the strength in the dollar. And I've been setting this dollar bottom up for probably, I said 3 weeks, I think, in the video last night. It's been closer to probably 5 or 6 weeks, and we'll go through that as well. And then, of course, the carnage that's going on in the metals markets right now is pretty substantial, with gold down nearly $40 at the moment. So we're printing down at pretty major extremes from that standpoint. But the whole point of doing these shows is trying to get into more depth than what I can do on the videos. So as we look at the market grid here, we're trading low 32.83. We're looking at the cash S2 32.86, next level 32.70, and I set up a really key number on the charts last night, and I primarily mentioned it in the relative to the futures, and we'll go to the futures here in a minute, staying with the cash. And I'm going to go bottom up on the cash market, and maybe I go top down. And bottom up, I mean starting with the daily, going to intermediate, and then going to the longer term charts. But the key pattern that's out there right now is we're very close on the cash to this key pattern, which is the 3270 level. We take out 3270, then we're looking at a potential retest down at the lows, which is 3229. So this is all going to set up. Make sure I get the right number. Yeah, 3229 has been the low of this pattern so far, and that's going to be retested. And we're 19 handles away from this. We're probably pressing the extreme, since I just mentioned we're down printing at the S2 level right now, 3286, low 83. So we printed just below that. We're back above it at the moment. So that we're probably looking at the extremes on the downside today. It could accelerate some more, but I don't believe it will. And there's just a lot of selling yet to happen in these markets. There's a lot of liquidation going on. And I'll bring up the WaveTech database here in a minute as well, because we did see continuing liquidation. We're down to 11% bullish, and it's getting absolutely to an extreme level. And it doesn't mean that that's necessarily a bottom, but it does mean that there's not a lot of stocks that are trending even on a short-term basis right now. So that's going to give us more room for downside action here. And so let's go ahead and take a look at the weekly charts. And weekly, we continue to trade under that 10-week moving average. Yeah, I wish there was a way to zoom in on these charts. I'm just going to put this out to you guys. If you know of like a good tool for live mock-ups, while I have a tool that I will do some drawing on the screens, but I hate it. I can't really do wave counts and text real easy. It's a real clunky tool. So if you guys know a good tool out there, maybe give us a heads up on that on the timeline. That would be awesome to have, just so I can better serve, especially if there was a way to zoom in on some of this stuff. I do have a tool that will zoom to a point, but we'll go ahead and stick with what we've got here. And I'm on full screen, so at least you're on a big screen. And I know a lot of folks are watching this on their mobile device, which makes it pretty small. So it's the best I can do at the moment. But so what we're going to be continuing to look at in this pattern is this is the 4th week down in this pattern. Now, typically off a high like this, we're probably going to get 5 weeks down in the pattern before we set up a low. And I went through a lot of detail, and I'll bring up another chart here in a minute, and I'll go through that detail again from the structure of the markets, because there's a very distinct structure that's unfolding. And unless we get another leg down, unless we get another leg down, then that this pattern should be completed. That 32.29 low on the cash market is likely to be a pretty substantial number here from that standpoint. But we'll see. As we just looking at the market grid here, you see R1 is 33.58. I don't think we see that level this week. We also see that the 10-week moving average is 33.49. And if you look at from where we were, we basically bounced about 100 handles or 200 handles. We went from we went 100 handles from 32.29 to just about to 33.29 today. So, and now we're backfilling again. But I don't see this pattern actually breaking down a lot below that 21 period moving average. I've been talking about that. That number is still in play. It's 31.98 on the cash. It is rising. So if we make it through this week and this is the low, then that number is rising about 20 points per week. So next week, that's going to be just below the low of this week, 32, between 32.10 and 32.20. So there's going to be substantial support down at these levels. And let's go to another chart and let's try to break down exactly what we're looking at here. And I'll draw in some lines just as I did last night. So this would be a little redundant, but I'll talk a little bit more about it than what I did in the video last night. So this is the pattern. This is an A wave right here, B wave, and a C wave down. And also going to the bigger scale. And matter of fact, let me restart this. I'm going to go to a much bigger scale. We're going to talk about what this is most likely I'm going to go through the whole, I'm going to draw out the whole wave. This is a 1, 2, 3 here, and we get a complex 4. This whole pattern, even though it made a new high, this is a complex 4, and then this was 5. This is the top of that sequence. We get an A, B, C, and then we start up again to this high. So there is a rule in Elliott, for those that some of you know this rule, but it's called the rule of alternation. So it means if the previous correction was simple, the next one will be complex. Otherwise, it'll be more of a wedge pattern, an ABCX, ABC type pattern. So what it would set up for this next pattern, we've got this ABC, but this could actually we'll set up another ABC pattern here, and then there would be an X wave and then another ABC, something like this, and this thing would end up in this giant wedge formation to set up this pattern. And typically this thing's going to end up going this way. I don't think we'll go through the monthly graph here in a minute. I don't think it's going to be as big as I've drawn in, so don't hold me to it. He drew a line down to 2,900. I think the limitation is going to be around 200-day moving average. If this is the pattern that unfolds, there's some alternatives. I don't like to get too far ahead of the markets because there's no point. Who cares if you're right about something 3 months ago? It really matters on what you can do today and how you can trade the market today. And I've talked about this before on some of these other live streams, is that really what happens a lot of times is you get, the further out you go in projections, the more likely you'll be wrong. So otherwise, if I tell you right now, 3 years from now, XYZ is going to happen, number one, you won't remember I said it 3 years from now, but it doesn't matter because I can't do anything about that. You know, when I see all these guys, I respect Ray Dalio's and all the guys that are looking out in the future, but the future doesn't matter from a trading viewpoint and making money viewpoint. It ultimately, we're going to evolve to those points. So when you're looking at being involved in markets, I've been doing this for 40 actually I would say 40 years, but it's actually, this is a 40, I started in 1979. And you know, when you're all we get to do is something with today, the next few weeks, maybe the next couple months, depending on the type of time horizon that we're looking at. But talking about, you know, what's going to happen in, end of next year, who cares? Okay, that's my vision of this thing anyway. What I care about is what I can do today. Where's the trade? Should I be in cash? Should I be short? You know, or should I be long? That's the only thing that matters. Should I be in or out? And if I'm in, which way am I in? That's all that matters. So when I go through some of these patterns, I'm going to dig into this chart, and think I have enough data. I don't have enough data on this chart, but we're going to go through, like I said, all the way through the weekly and monthly analysis. So we are going to look out a little bit, but we're only going to look as far as it makes sense to look. And we'll talk about some longer term stuff, but all this stuff is dynamic. My favorite thing I see on the channel, oh, he flipped. He was saying it's going to go down tomorrow and it's going to go up. And I just ask you if you see me, yeah, I am going to flip. I'm going to go with the markets. And 2 weeks ago, we closed under some numbers and the markets flipped. We traded up to major resistance, went down, and we made new lows. And what I do on the channel on a normal basis, you folks know this, is I'm actually doing daily commentary. I literally say at the end of my opening dialogue, let's take a look and see what the markets are telling us for tomorrow, the next day. And sometimes it will encompass what's going to happen at the end of the week, but it's a day-to-day analysis. And that's why we put the Wave Tech tool out there, all those things, so you can have a bigger perspective. And I talk about those. Our models, and I'll show you, are still short from September 4th. We haven't reversed. As I said, there's no bottom formation yet here. There's the beginnings of a minor low, but we're still developing it as we go through. So it's really it's really one of these situations where you've got to step by step. And as you folks have been, and I'm going to bring up the database as well, the WaveTech database, and you'll see this thing's 90% of every stock in the universe of 16,500 is in cash. It's out. Period. I think that happens. Thanks, Supa, for the super chat. Appreciate it. But the whole situation that we're dealing with here is a very dynamic unfolding basis. So let's get back to analysis here so we can really dig into this thing. So this formation is, as I drew out just a minute ago, is going to be the key to the next several weeks. I'm going to see what kind of data I can pull in on this and see if I can get to the next level. Yeah, that's what I was worried about. Let me all right, this will be a bit better. Now we're going to go to the next level. Keep in mind what we just looked at on the daily charts. Now we're going to go into the next level and take a look at how the bigger pattern set up. And this is actually probably the most interesting thing. A video I did maybe a couple weeks ago after we had the breakdown of the pattern. There was a significant finding that I talked about. And thanks, Dustin. Appreciate it, man. Let me show you what I'm seeing here. This is probably the most significant thing that I've seen going through all the analysis over the past several weeks. And it was interesting, and I showed you this before several times, is that on April 30th, I figured this pattern out. Pretty much got it spot on. Even though we made a new high, I'm going to see if I can draw this in on a much bigger scale here in a minute. But this big decline we had down, I think this green line does a pretty good job. I think it's blending in. Let me change colors here. All right, let's try this. Red's a little better. But this big decline down, you could argue that it was a three leg down, but on a weekly it was just super straight down. Very possible We took out a low over here. Going to redraw this. You folks are going to hold me to all these lines. I know it. So this is going to be that line there. We went down to the 2100 level. Then this is the structure I want to point out. We basically had 3 waves to the upside. So it's very likely, I'm going to clear it again as I keep seeing something. You probably can draw this a little line like this, and then like 3 down, and then we're going to get three waves up. And this is going to set up, I know everybody on the internet is talking about this bugle formation. Well, in my experience, last time I saw everybody talking about the bugle formation was back in 1994, and it's not a negative formation. It's actually a very bullish formation. I'll show you on the next level here. But what this is setting up now, so we're going to clear out all these lines, and we're going to talk about this section right here. So we've got this move down. This is weekly graph. What I just discussed on the daily is that we will retrace back up, and I can bring up the Fibonacci relations here in a minute, but we're going to come back up into this range, and then there should be a leg down. And chances are this 40-week moving average is going to end up to be the potential for this downside. Now, I've been talking, this cyan line is the 21-week moving average, so I'm not getting messy here, but this average is starting to lose momentum, but it's still got an angle up, and that's going to keep some support in the market, and that's why I am clearing this up again. That's why I'm looking at this pattern here, where we're going to see a bounce somewhere from this level here, whether it's the 31.98 level or possibly we have seen a low, even though there's not a lot of signs for a necessary confirmed bottom yet. That's something might take several more days to see what happens. So after this next little rally, should it happen, we could extend this one before this happens, so we could extend down a little bit more. But excuse me, this tool used to have a way I could just backspace one line, but it's not letting me, so I'm going to redraw. So this move down, move up, and then this next move should come over to here. And then, like I said, we're going to have a big area. This should be even a complex wave. And if this fails over here, then we would see a full retracement. I'm going to bring up these numbers so we're not just operating in. So this full retracement of this move down up from the 2100 level all the way up to the highs we just saw could be a full retracement. There's no way to, you can say it and end up being right. That works. But like I said, it doesn't matter. There's going to be better points to trade off. There's going to be higher probability points to make decisions from. And those are the things that are important. Like I said, is we have to trade what we can see right now, not what might occur. So what we see right now is we're probably very close to at least a bottom of this first A wave, and then we're going to set up a right shoulder, and then that right shoulder and the configuration will tell us everything. I see some I see some potential for this thing to ultimately roll over. So let's do the Fibonacci's on this thing now. Okay. So first, and I think this might be hard for you folks to see, I'll do my best to get it up there. 1 second. So these numbers on the right-hand side, I'll read them off to you. A 0.382 retracement, 3365, 50%. I talked about this in the video last night. This is the cash market weekly, would be a move to 3407, and 0.618 is all the way to 3450. I don't think we get to that retracement value, primarily because there's some big numbers here that are going to come into play, and those numbers is going to be this high right here that we printed, and that's going to be a pivot point. We might penetrate through it, but that's a long ways back up there. So now when I draw in this wave, we're going to even get a 0.382, or we're going to extend to 0.5, and then there's going to be a pattern, and this is where the money will be made, is when we get back here, what the structure of the markets. And one of the things that I talk a lot about when you're looking and doing analysis of the market is what the structure is. Somebody made a comment I saw on a channel that, you know, the ABC, they have a target of so-and-so. Well, I have targets too, but the markets determine where it stops. So you could have a target at the 21-day moving average, or it could be a calculated Fibonacci ratio. In the end, when you see, this is about the structure, when you see a reversal bar or some key event that happens, and this is why I've got candlesticks up here right now, but I happen to like, still am an old school, old-fashioned bar chart guy, but I look for those reversal patterns, the inside bars, some things that tell me what's happening within the configuration. And I'm also a bar counter. As you mentioned, if you watched last night's video, you're going to see I mentioned a 5-3-5 or a 5-3-8 pattern. And what that means is you get 5 bars down, you get 3 up, and you get 5 down. In this case, it looks like we could get the 3 up, and then the pattern may extend. It may be there's a number of these patterns. There's 3-3, 3-3-5s, 3-5, 3-5. I'll get it right. 5-3-5s, 5-3-8s. There's a bunch of these little patterns, and they usually will end up on the ultimate bars will be somewhere between 9 bars and 11. Sometimes they'll extend out to 13 in these patterns. But you have to watch the structure will tell you where they end and where they start. And that's what, when I see these things, and it goes back to that Thursday, I think it was 9/4, was September 4th, when Apple had the big reversal. That was a setup, that 3-day reversal pattern. There's a video on the channel you can watch. It says how to short Apple. It was actually a really good trade. And all you have to do is follow those rules. And anytime you see one of these outside bars, that video was meant more as a learning tool and a trade setup than anything else. So that's something that you really could look at. And yeah, somebody asked, I see on the timeline, if there was a recommendation for a book on Elliott Wave. Bob Prechter's first book on Elliott Wave. They actually sent me, Elliott Wave reached out to me recently, and I can look up the link. They were wanting to put a link out, but of course they want your email. They were going to give that book out for free in PDF form, and which is fine. But I really didn't want to. Yeah, I thought they were just going to send me a PDF link, but they were trying to take, you know, our community and move them over. It's okay, I guess. I don't know how to feel. I've never, like I said before, this is something new to me from the standpoint of what, you know, what's going on in handling a community like this. So I'm learning as I go. But you probably can find that book out there. If you go to Elliott Wave International, they probably have that sign up link right there on their website, and they will give you the PDF. And it's an interesting situation there on this stuff. I've only read one book on the markets in 40 years, and it was that book. Okay. And that book's a really good one because there's no opinions. It's about all the different tenants. It's about, wave structure. There's a lot of really good work in there. And other books that Proctor wrote later down the road were more of a giant opinion book of what's going to go on. I think sometime in the last 30 years, he's called major collapses to zero like 3 times. But the work itself and the structure of what it gives you is really good. It's a great roadmap for understanding markets. And wave tech is actually the use of moving averages, the PPMs, and Elliott theory all encompassed in one. And I have a folder similar to this thing here, and it actually has 38,000 words that I'm working on a book on the wave tech. I think our working book title has been Wave Tech, the Magic Formula. And it's really a combination of moving averages, things you see here, 10, 21, 40, simple averages, all those things. The reason why I use simple, a lot of folks are using exponential and weighted averages. I just like the pure simple stuff because it helps to define the patterns and where the breakdown points are, for me, better. You might be able to use those things, but everybody has their own little different techniques. These are just what worked in original work that was done back in 1984. All we were trying to do is figure out when a moving average was a valid trend line, when it was going to get broken, and that's all we used Elliott for, is patterns, using moving averages as trend lines so they're dynamic, and using the PPMs to determine probabilities of when those things are likely to change. And I'm an old dog with one trick. I use the same indicators I've used since we developed those in 1984, and the systems and everything else encompass that entire theory. So I'm one of those guys that, there's a lot of us folks out there. I'm like the classic rock guy. I got a hit song, I'm still playing the same hit song, and it seems to keep selling. It works otherwise. So this whole technique has a lot to do with all this stuff. Let's see if we can go to the next level. Been having issues with TradeStation. Yep, not going to work. What we are going to do, so it's similar in nature. Let me let's go, and we'll use the Dow Jones. For whatever reason, the INX history is not coming up. It started this the other day. I have no idea what's going on there, but this is exactly the chart that I wanted. Is what I want to do here is I want to bring up, I want to talk about this wedge program, wedge strategy thing that everybody on the internet is talking about. I've seen it around all these channels. The most wide bearish pattern ever in the planet, and these guys have been trading for like 3 years, and they already know this. This is not. I'm going to see if I can. I'm going to attempt to find the one I was telling you about in '94. So I think this is a good thing, good rabbit hole to go down. I think this will be good to go down. Yeah, so let me flop over. I appreciate the comments since I get into this deep analysis. Yeah, market's down 1% now, 65. So what's the low here? 62. So that number I told you about last night was 56. So we're right on the edge of this thing just rolling here right now. So yeah, so this is a pretty critical range. So if you guys see a new low or something, let me know. I want to stay on this analysis I'm doing, and then we'll move on and we'll go down the trail. But this is pretty in-depth stuff. I'm doing a deep dive on what's going on here. So yeah, we'll see what happens here. But that 56 on the December futures is the number to watch very closely. Okay, so going back over to this analysis that we're looking at, let me just see how far back I can get on this. I think I can actually get back. I don't know if I can get this isolated or not, but we're gonna try. See what happens here. Bear with me 1 second, folks. Guess maybe it was 90. I'm going to draw this in real quick, and then we'll come back to where we are. So this was the bugle that everybody was talking about. And we did work the wide range of the bugle, but ultimately it resolved itself to the upside. And in fact, that was 90, not 94. I just remember it was after, this is the 87 crash right here. And it was after the 87 crash, and it was also, everybody was still thinking about the crash. The market's going to crash again. Sound familiar to current situation? Market crashed, it rebounded, so now it's going to do it again. And this is the pattern and that everyone was talking about. And this one is a giant pattern, and whether it's valid or not, we'll see. But I just wanted to bring that up because these things, you know, if you've been watching this channel for a little bit, you know that beware of Edwards and McGee market theory and everything. They teach, there's some folks out there probably step on some toes, don't care. These CMT, certified market technicians, they teach them all this stuff, and it's crap. It doesn't work. And people have asked me for years, are you a CMT? You couldn't pay me to be a CMT. They're cookie cutters. Everybody studies the same thing, and they come up with the same basic theories. And there's a few good ones that actually think outside of the box. Maybe John Bollinger's one. But I'm not saying they're all bad. I'm saying that the theory they're teaching, a lot of Edwards and McGee and these patterns, and they're real basic, rudimentary technical patterns that they teach, and an MACD and all the typical retail indicators, RSI and all that. So I just wanted to be different back in 1983, 84 when I got exposed to some of this stuff, and that's why we started doing our own research and developed our own indicators. It was too cookie cutter. Everybody had the same opinion, and I wanted to have a different opinion. So that worked out pretty good for me. But let's go ahead and let's see if I can get back to square one. So if we get back to the pattern that we're looking at today, let me, so I'm not sure this is a valid pattern. If you drew it, maybe even if you use the candlesticks and you drew off the top of the candlesticks, you could chop it off. But we could move back into this. But one of the things that's happening here on this monthly graph, and I'm going to finish with this right now, and then we're just going to start moving on. Yeah, I know Ralph. He's okay. So yeah, we'll just say yeah. but but he's one of the older school guys, by the way, Ralph Alkenpiner. He can yeah, he's an okay guy. I mean, you know, I haven't followed his work, so I'm not going to criticize him. I'm just saying that most of the people that are getting acronyms past their names, it used to be CFA, CMTs, all these different things. I've dealt with these folks for years. It's really it's a certification like a CPA. Not all CPAs are good because they're a CPA. And it's the same thing with anybody with those designations. There's probably the same amount, 10 maybe 20% of them actually are capable of taking that knowledge and going to the next level outside of the box. So 3260 prints, huh? Okay. Yeah, we're getting close. We'll switch over here. But anyway, this whole pattern that we're setting up here, is most likely this is what could be happening. And this happened in the last time folks thought I was crazy in 2009, that whole correction. I said that was a giant wave 4 and there was going to be another high down the road. Everybody thought I was crazy. Okay. And I wasn't crazy. And now we're setting up another one of those patterns that look to me that is going to have a multi-year consolidation. The highs that we saw, you know, recently, maybe the high, we'll see this big pattern, but we're looking at, I think, some time for this pattern to ultimately unfold. And the thing that's going for it here right now, though, is that these monthly moving averages have a lot of upward momentum. So we're going to flop over to this chart here. And then I'll show you that. Then we're going to move on and start looking at some of the other markets here. Where are we at on ES 63, 63.25 prints? Let's go over here for just a sec. Yeah, so 60's low, 56 key number. This could be an interesting place to take a punt. The machines are definitely in here, and I was warning you a couple of days ago, the volatility levels are high enough right now that the machines are going to continue to be very active in this at this point in time. So, but definitely this is pretty close to the extremes on what's going on here. So let's do one final dive into these monthly markets real quick. Now, PPM1 has actually rolled over, which is interesting, but PPM2, 0.68 and 0.60. This is what I was talking about. This is the moving averages that you see on the screen right now are the 21. Let me draw this in. The blue line here running through they're almost exactly this is the Dow Jones we're looking at monthly. So 10 period moving average 25,569. The 21 month moving average 25,269. So they're about 300 different. And then just below that is the 40 month moving average 22,764. So I call when we get something like this, I call this the demand line is this 21, and it's at 0.60. It's running at 0.60 through here right now. So that's going to be your dynamic trend line. The PPM down below here is actually accelerating 0.68, I call, and 0.60 on PPM 3. These are positive numbers. Anything over 0.25 is a bullish number and tells you that over at 0.68, 0.60 plus, there's only a 30% probability for the market to decline below those numbers I just mentioned. So 25,269 on the Dow Jones, and then 22,764 is major. I get that those are, you know, a long ways from where we're trading right now, but those are the major long-term points that matter. And you're actually seeing acceleration in the ppm2, and ppm3 is in a bottoming form. So there's still a lot of underlying trend force, up force that's in this market yet. So as far as I don't believe from at the moment that we're going to see any big rollover, except for maybe trading down into these averages, going to what I talked about a minute ago, doing that big large ABC, printing down potentially down to a 200-day moving average on the S&P 500. And those are kind of the broader terms. So I think I got that out of me. I spent a lot of time on that, but I don't get a chance to actually go in depth that much. And it's yeah, so all right, I'm just looking at see what's okay. 32.56. Yeah, we've taken that out. Good call. Thank you. Let's take a look at that. Yeah, there's no support now. So we're down 50, 55, 54. So there's nothing here. We're just seeing a continuing collapse out there, and new lows again 54. So yeah, so what this sets up, this is actually cool that we're doing this live, is what this is setting up is ultimately a retest of Friday of the lows at 29 in cash. Let's go over to the cash symbol here, and let me get this over to a daily. In fact, yeah, so we're trading right now down to, I'll bring that up on screen so you can see it. The STX number is 30. STX is 32.57. The low so far is 64. So they're taking it all out. We're 52 now. We're seeing just new lows on the cash, 64.41. So yeah, this is setting up pretty negative. You see ppm1 is rolled over minus 0.40, minus 0.23. So all of a sudden we had basically you could argue that this low here was the third day up. We reversed right near the 10 pairing moving average 33.38. We came short of that at 23. I actually mentioned the 24 to 33 numbers in commentary last night. Those were going to be the point to look and watch and pay attention for a reversal. I'm pretty sure I left that in there. So there's yeah, so we're definitely seeing this thing. Whether they can just keep printing this down. We're down 152. Let's take a look at the NASDAQ here real quick. NASDAQ is not quite to its extremes for the day, but we're looking at low 10,890. 10,877 is S3, so we're close to S3 right now. 10,793 is the next level down. That's another 100 points. I don't think we'll see that, but who knows? But we're seeing PPMs just turn over just immediately. And that's the kind of market we're in, and this is why that's why I emphasized last night that there has been no signal of a bottom as of yet. Okay. One of the things that keeps happening here, check it out. Let's look at the Dow here. One of the things that's happening on the Dow is we're continuing to see the breakout. Let me go to weekly because I got a lot of pushback on the channel. People telling me there's no reason for the Dow to go up. I didn't. This is the futures that we're looking at. So on the futures with all the rollovers and everything, it's actually above its 200-week moving average. When we go to the cash, it's well below it, but we are printing above the RXT right now. 94.06 was the weekly extreme. We're currently 94.21. So, and you're seeing, I mentioned this in last night's video, these PPMs are just screaming. This is a bottom in the Dow. For whatever reason, this thing's going up, and Meanwhile, when we flop over and take a look at gold, that's why gold is trading now down to its 21-day moving average. I mentioned that last night as well. 1862. We printed 63.20 on gold, and now we're still down at the lower end of those levels. And I'm looking at the futures, a lot going on right now. Looking at futures down at 32.50. There's not a lot of numbers. I'm going to go over to the S&P because this thing is getting pretty exciting from that standpoint. So on a weekly map on the S&P, 32.28. This is the futures. That's your next stopping point. We're printed. The low this week so far has been 32.17, and 28 is the next support level, S2. And like I said earlier when we started this, R1 was 33.58. We're never going to get there. That 32 that 32.56 number was that big pivot. So we'll see how we close today, but this is enough for me to say we're going to at least retest that low, and then maybe that 21 period moving average is going to come into play. That's right now on the futures 31.76. So that's an easy tag from here with the kind of volatility we're seeing right now. And I also mentioned last night that the three-day the 3-day volatility had kicked up back to 80, which told you that the algorithms and the machines were going to be in there trading big time. Yeah, silver. Might as well just dive into silver here. Silver's getting hammered as well. These metals are definitely over. We're heading for the 21. We'll call it 2190 level is probably going to be the point where this will stop. That 20. All these 21 period moving averages around are going to be good. As far as that goes. All right, let me just take a look. What time is it getting to be? Yeah, maybe a let's take a look. I want to go over to the Treasuries just for a second here. There's two things I want to do. Then I think we just start digging into stocks, talking about what you guys want to talk about. I got all that stuff on the S&P out of me, and so I think that's a good thing. But we could see an extension now that we've blown out these lows on the futures at 56 low. That was your last savior. And now we're looking seriously at least retesting, possibly going down futures 31.74, and I'll have some numbers targeted for tonight's videos for sure. Yeah, with the I'm just looking at some comments here on the chat, and gold's going to stay under a lot of pressure. There may be a trade in here. I thought maybe there's a trade here at this 62 level. There's a little bounce going on, but it's very risky right now, and primarily because of what's going on in the Dow. The Dow is just going to get stronger, and I mentioned this in a video or maybe last week's live stream, is there's no way to determine, I don't know why the dollar is getting strong. If somebody said, why is it getting stronger? I don't know. Technically, it is definitely going to be stronger. I still think we're looking at the 10-year here, that the 10-year rates are going to continue to move up to, at least 0.9, maybe a little bit over 1%. I just don't see them going. They're not going to zero. I guarantee you the Fed's not going to let that happen, no matter what they have to do. So yeah, I'm keeping one eye on the S&P futures here. They're trading right at 50, 75 here. If you have a big enough screen, you can see the live quotes up in the corner there. But the patterns are unfolding here on the Treasuries, especially when we go to the next level and we go over to a monthly chart. This is just like the Dow. We still have some downward pressure, overhead pressure, but this is a major bottom forming here. This thing will come back in, whether it makes it to 1.2, 1.5%. It's going to move higher over the next period of time. Let's say the next 2-3 quarters. And we still have acceleration on the PPM1 that is tracking the 10-month moving average. That's currently at 0.91, so that's going to be major resistance, but we're going to move back up toward that number. And as this thing goes, probably will stay in a range 0.6, high end 0.9. That's going to consolidate. That's going to bleed off a lot of this downside momentum. This is similar to how crude oil looked when it was at its lows, by the way. It was absolutely looked like it was going to zero, right? And of course, we know the famous minus 37 on the crude, but this market was not going to go. We're not going to see negative yields here in the United States. I've said that all along. I know there's a lot of folks that have go on. So yeah, so just looking at some of the chat line, folks, just trying to stay in up to speed with what you guys are looking at. Cash is actually, somebody says cash is trash. Sometimes cash is your best position by far. You'll burn more money trying to be involved in certain markets. You're better off sometimes to step to the side. By the way, this is old floor trading story. Pacific Options Exchange, the firm I was with was Sage Clearing. They had pool tables, like Galaga and Space Invaders. This was old days, right? Chess tables, ping pong. You know why they had those? So when you were losing your ass, you could get off the floor, get into cash, and go upstairs and save your ass. So get into cash and save your ass. I came up with a good line there. And that, so don't be afraid to be in cash. Cash is not trash. That's like, that's a good way to lose all your money thinking like that. Absolutely, will tell you that. Anyway, and matter of fact, Chewy just stole my line. I've been telling investment advisors that cash is a position, and it's okay to have cash. In the world of MPT, modern portfolio theory, they talk about bonds, stocks, and cash equivalents. And cash is a position. That's absolutely right. And we've lived in our modeling process for a lot of years by just pulling back and going to cash. In 2008, we didn't have the type of people that, if you're looking at money manager types, most of them can't go short, right? Their hedge funds can, but if you're a mutual fund, you can't. Mutual funds are mandated to stay involved in the markets all the time. They write in their prospectus, it says how much cash they can have. So that's a problem with mutual funds. That's why they go down like they do. Not because the manager wants to get out, trust me. But they have, I knew a friend of mine used to work at Fidelity, and her job was to make sure that the managers were staying in line with the prospectus. Not too much cash, not overweighted in sectors and all that stuff. So she had a group of fund managers. She was the fund manager police. So those people have to do that. But just by being in cash in 2008, we saved billions of dollars. I'm not kidding you. That's a real number. We had one advisor, we saved $1.6 billion in his practice because we got him in cash. He didn't have to go short. He just needed, I call it the art of missing out. So being in cash is a good thing, but thanks for bringing it up. It's good. Yeah, of course it's not a long-term position, but it is in times. It's a really good position. So yeah, so let's so we went through all that. Where we at here? 49, still printing down. Let's go over to the level 2 screen. Take a look here, just see what's going on. Yeah, we printed 45 low. Let's watch this trade for a minute, because I want to point out a couple of things on what's going on here. What you'll see here is, if you watch the time in sales, you'll see these out of sequence, below ask, above ask. Those are all machine trades, man. They are pushing this market where they're literally pressing below what's visible. So what's happening is they're selling everything. You see on the left hand side, you see the numbers of contracts. They're selling everything on a bid, and then selling the next bid down. So that's why they say it traded below the bid, because they showed the last traded bid at that level. And when you see that, it's usually heavy action by the machines. But yeah, definitely we're still under pressure here. 45 low. So everything has flipped from last night. We've actually went up to that extreme value I talked about in the videos last night, at the 33.24 to 33.33 was actually the number, and we reversed out of there, and now here we are, almost 100 points lower. Here we are at the lows of the day. We're probably going to print new lows here. This is a pattern, so let's watch this trade for a few minutes, since this is the reason we're all here. Here we are at the lows. You'll see them run the lows here. I'd be shocked if they don't. They'll bounce about 150 points, like 6 to 8 trades, and they'll come back. Here we go. Look at this, all the way up to 49. So you may have just watched the low of the day there. That's kind of action you get when it bounces. But they'll go. There's another try here. Let's watch it for a few minutes, and it'll 725 will be the pivot number. If it gets back below 32, 47, 20, 75, that will be a trigger, and it will set up for a new low. But that might have been, we might have seen the low of the day print right there at, what was the low? 45.25. We'll see. Now we're 52. Yeah, that's at least a few minute lows. So yeah, and I'm sure, yeah, the Dower's driving all this negative action. And I see somebody pointing out that DXY is at the highs, and that's what's driving everything. I made that comment last night. The biggest story out there right now is the strength in the Dower. So we printed up to, see what we got to here. We got to 52 print. We'll see if we can get back. That 47.75 is the pivot on this pattern, and we'll continue just to chat about this. I'll look at some of the see what else you guys are talking about. Appreciate everybody sticking to the markets today. It's awesome. Yeah, I just see Gino's asking, can the stocks and the dollar move higher at the same time? Absolutely. Matter of fact, some of the best rallies in history have been during those times where the dollar was strong and the markets were strong. But it's also been the other way, where we've seen discounting the dollar, and it just depends. There's a backdrop that sets those scenarios up depending on what's going on in the economy at that particular time. So they're very unique times, and they can actually go both ways. Where the Dow is lower, market goes higher, and the other way. Yep. And yeah, so I'm telling you guys, you have no idea. The little story I told you about the Picos, you have no idea how much money was saved playing Space Invaders. I mean, you know, it's crazy. Yeah, the dollar and gold relationship's a little bit different. Some folks are talking about that right now, and you know that's a different scenario. I just want to stay on the screen. We'll go back. We're going to dig in just in a couple minutes, folks. We're going to start doing individual stocks. This is pretty distracting what's going on right now. We're trying to trade back down to that pivot. Here we are, 775. This is a pivot. They just traded 50. So let's see if they can print below this level, then they'll probably print another low. But this is one of those key tests on intraday that you want to watch when these things are setting up like this. And you're going to see this 775. Here we go again, almost. This is the pressure coming in. Machines are hammering these bids right now. And here we go, 50 prints, 25s. There's about probably right now a 40% probability that we'll print down into new lows. We'll see how this plays out. I would say let's stick with this for maybe 2 more minutes, 3 minutes. Let's watch a few more bars, and then we'll move on. And don't do it yet, guys, but let me know when. I'll let you know when to start giving me some stocks, and I'll make a list, and then we'll start digging through some stuff. And we will start with the Apples and Teslas. We'll start there, but we'll work from there. Yeah, so we printed down just below. We printed 7. Let's see what that actual low was. We printed 725, 32, 47, 25, and it bounced from there. So that is that's a decent sign. But this is one of those days when you get down this hard that the machines are going to lean on any rally. So we get bounced back to 54, 56, and you'll see pressure coming back in again. So I think we've seen a lot. So let's do this, folks. It's time. Give me some stocks that you want me to cover, and then I'll get about 15 of them or so, and I'll just start ripping through these stocks. Meanwhile, if you guys will also give me a heads up if there's any new lows and all that kind of stuff. And you got to give me symbols. I don't know some of these. Whoa. All right. All right, just back off just for a minute. I'm going to get some of these down. All right, 1 second, just about there. I had to freeze the screen so I could capture some of these. All right. All right, let me start digging into some stuff. Here we're at 43s. Here's the new low. So they did print them through while I was writing down symbols. Here 42. Now 32.17 is the low on the S&P right now. So that is for the week on the futures. So I don't suspect we'll get down there, but this is the pattern, and I'll just talk about this a little bit. You'll bounce between 3 and 500, and basically the machines are actually taking profits right now for the most part. That's why you see the little bids come in. It'll start to move up just a little bit. Once they get to another level, up to, if we trade 49 now, maybe as high as 50, they'll roll it again and see if they can print it down. I'm gonna put you folks on hold just 1 second. Okay, folks. Thanks, Matt, for that. I appreciate the super chat. Just 1 second. I literally have the firemen at the door because they want to check out my fire extinguisher in my office. So it'll take me 10 seconds. I'm sending it outside for them. Be right back. We'll watch the markets trade here for a minute. All right, I'm back. No more fish and chip talk. Oh man, that's too funny. Okay, yeah. So here we are, trying to print down at these lows. Let's go on and let's do some stocks. If you guys would give me a heads up if you see any crazy stuff going on. So I'm going to go off screen, off of the futures, and focus on what we need to do next. And I'll start going through the stocks like we always do. So what time is it? Yeah, we got about we got a ways to go yet. An hour and 15 minutes. So let's get over here, and I'll do a quick daily and weekly analysis on these stocks, and we'll start off with Apple. And you know, Apple continues to be in this downtrend. It did exactly what we would have thought it would happen. PPM's a minus 0.83. That's 20% probability you can trade above the 10-day moving average. The high today, 112.11, and 111.57. So we did actually trade above it for a second, but what I should have said, 20% probability that it will close above that number. Reversed right off of this 10-period moving average with a 0.83, a minus 0.83. This is a monster number. PPM2 minus 0.71. You know, I want you all to think about all the people that bought the split on Apple and Tesla is not as bad, but the Apple split, I saw so many people in comments, they're going to buy when the split happens. I tried to tell everybody this split was a really bad thing. They took the largest capitalization company on the planet and quadrupled the amount of stock on the markets. That's not bullish. It never will be. Now, longer term, the whole concept of that, and also the old concept of making the stock cheaper so more people can buy it is rubbish, because now you have fractional shares. You can buy the stock anytime you want it. So it doesn't matter what the price is anymore. So let's go to weekly, just see what kind of targets we got on the downside. We're looking at 107.97. S3 on this is 107.84. So we're printing S3 on a daily basis. When we go to a weekly basis, we did see some bigger numbers because we had a nice bounce on Apple the other day. So right now, S1 102.88, low 103.10 for the week. So that's probably going to be, that's most likely going to be the low of the week. So you're going to have to work with the daily grid is going to tell you what's going on, and yeah. So this range for the week has probably already been established on Apple. You're looking at 112.17 10-week moving average, the high 112.86. So we went right up to that level. Down below, then we have to look at the grid 102.88 with a low of 103.10. So it's going to be random inside there. You probably have to break it down, look at an hourly chart or something like that to try to figure this thing out. Yeah, so I see the S&P is printing 40 right now. So we're continuing to be under pressure. I'm going to flop over that screen just for a second. Yeah, here we are on the lows, new lows again. So they keep this pattern. This is a machine pattern that we're seeing here. And what happens is you'll see it will print down, it bounces just like you see, it makes a new low by 2 or 3 ticks, sometimes as many as 8. Here we are, and then it'll bounce 6 to 8 handles, and then the machines come back and hammer it. Here we go again. We're going to hammer them down, and they just keep grinding this thing down. And this has been going on since about, this is my clock here, 11:15 Pacific time. This is exactly what continues to happen. They're trying to press it one more time. They're not done with this thing yet, I can tell you that. And whether 38's the low or some other number, there's really difficult to actually go through. So let me get back to stocks, okay? So let's do Tesla next. Let's get through the stocks that a lot of folks are watching. Tesla all of a sudden is trading back down to on its weekly level. On the grid, we're looking at the extreme on the grid, 46, S3 68.75, lows 78.07. So we're pretty close to S3, but it's also the 10-week moving average is 365.44, 10 weeks up 2.18. That's a buy at that level. I'm just going to tell you, you see a print at 65, you can play this thing. So the way to play that then, if you have a short-term chart, look for an hourly reversal, some type of reversal on a shorter term chart, and you'll be able to play this and probably looking at a bounce between, let me just get a number set up here, 365, that maybe the next level is going to be just back to S2 or an S1. That'd be 394, 419, but there's going to be a trade-off of that for sure. Probably an option trade is probably going to be your best bet to maybe put in down at these levels, do some vertical or something like that. Okay, let's do daily. So dailies punch through all the way to the 40-day moving average. Those of you who watch the channel, you know this, that the 40-day simple average is very similar in price to the 10-week moving average. And when I do a daily, weekly, monthly, the slowest average, or the 40-period average on the daily, is the first average on the next chart. And it goes in the same way on a weekly chart. The 40-week moving average is very similar to the 10-month moving average. And this is why I do these top downs. That's why I use the averages that I do, because they all relate to one another as they go through the sequence of everything that's going on. Yeah, so yeah, I think the emergency brake on Tesla is that 65 number. It's another 15 handles lower. But if you can see that, there's going to be a trade. But we punched through the extreme for today was 93.90. That's gone. Last 80, 380, 92, low 78. So what's that average right there? The average is 376.61. What's the PPM? PPM's 0.57. That's going to be a decent. This is going to be decent support right there at the 376.59. And yeah, with that kind of rate of change, that's a good point. All right, so let's do Softy, Microsoft. It's trading down toward its daily extreme, 201.71 low. We're looking at S3 201, 200.83. So we're about $1 off the extreme on this. As far as the pattern goes, also very similar pattern in that it's in a downtrend on a short-term basis. As we go over to the intermediate, we're bouncing between right now the 21 and 10-day moving average. 268 is the 21. That's got an upward slope of 0.66. That's going to be good support on that, and 209. So there's your trading range. You probably put a straddle, put a vertical around that range, 200, 209. You probably get all the money. Okay, let's roll through these. Here's Alibaba, hanging in there. This is weekly, 10-week moving average, 265.98, low 266. Hit support, we're trading 273. So, but PPM1 is plus 1%, 1.58, and 0.68. So good support here at that level. Don't see any rallies, but more of a sideways range to continue. And we did get, those of you new to the channel, what we have, there's these lines. These are not Bollinger Bands. They're called the WaveTech volatility lines, and they are based on daily range volatility. There's an average look back, and then it applies some Fibonacci ratios to those numbers. But when we get a close, like we've done it twice, we get a close right here. Let me draw this in so everybody sees this. This is, I can't wait. I'm so frustrated with the, getting these market grid numbers out. We're getting an error in one of the modules that is producing it. But this right here, that arrow there closed outside of this yellow line. That signals 2 to 3 days minimum of sideways to down. We got another one right here. We got a spike, and now we get there 2 to 3 days down. And they typically will move to the bottom end of the grid, or they will move toward the into a moving average. Like in this case, there's a 10-period moving average there. So those are the numbers that are important to watch there. On a short-term basis, we'll see if there's anything there. There was something on the, yeah. So we're just, it's interesting when you get down into the looking at just the daily charts, where the 269 level is going to be major support. You got a nice 0.23 ppm, so it's in trend mode. That's going to be support. So you could buy against that number with a stop below it. Probably be pretty safe in trading that thing against there. Looking at nothing else up at the top end of the grid for a trade, 278, 282 range. Maybe there's a little more, but this stock's a little risky just because of what's going on in the markets. Now we're printing, I'm looking at the S&P right now, printing 38. Let me just bring that up here just so we can see the low. 36 now is the low on it. And as I mentioned, 32.17 is the low of the for the week on the futures on the S&P. And when we broke through about an hour ago, when we broke 32.56, that was the number I had on last night's video. That was your critical pivot number. It took that out. You guys watched it real time with me, how it just accelerated through that number. And you know, here we are, 35.50. We're printing new lows as we speak right now. I'm going to flop to the level 2 screen just for a minute so we can just watch this trade for a second. But here we are, 25 lows. We continue to do that bounce pattern. You'll see it here. You get this little bounce and down. This is all algorithm driven. There's not a human trading, hardly. This is all algos trading here. So here we are at the lows again. No one wants this stuff. There we go, new lows, 34.75, 34 evens. Then we get the bounce. 200, 250, 275 bounce. Machines will come back running at it again and slam them back down. This is the pattern on all of these algo days. These are, you know, I don't know, not monitoring Paul's testimony or whatever, but somebody's not saying anything good. Yeah, Chase, I'm sorry to hear that, man. Stop losses can be a good and bad thing as they go. Yeah, there's no bounce, and I talked about this a little bit ago. Is that when the machines get control like this, they're not gonna let you out, and if you try to play the bounce, they just take your money. Here they go again. They bounce to 7. You get these little dips. You get a little roll up, and then they go back down. If you can see my cursor over on the far side there, and then they'll press the lows. One of these lows will be the low of the day, but we're so far below any of the numbers that are important there. It's hard to imagine where the lows are, because there's not even support numbers below this number, I believe, at this time. Let me just go back over here and let's see what the market grid is telling us here. So we are 37 right now. S3 is 37, trading 36.25, 34 low. Next level, 32.18 is the STX, which is the extreme projected for the day. PPM1 minus 46, minus 0.25. These are big trend numbers. I know the trolls will be out on the my thumbnail is upward correction to continue. Well, it did continue and ended the same day. So what I was expecting to see was a move up to the 33 on the cash, 33 24 to 33.33, which it did almost exactly, and then reversed. And I believe I was telling everybody, be careful, watch for a reversal off of these levels. Yeah, at this rate, can 31.90 hold? That's what we're going to find out. And I suspect that by, tomorrow, in tonight's video, I'll be talking about I'll be talking, about the continuing claims and the claims numbers that are coming out, and those are going to be key for at least market sentiment tomorrow. But this isn't about market sentiment. This is purely about the machines running the show. So let's try to. I'm trying to stay focused with all this going on. Let's take a look at Nike with this big giant spike up. I suspect it's just breaking out of everything here. Let me bring something up I haven't had on there. Let's look at the Fibonacci numbers here. The Fibonacci projections. Yeah, this is actually interesting. You'll see them on screen. So the projections on the upside, these projections were issued on 9/11, and the high target was 131.82, 140.08, 145.17. So we go to today's action, and we're looking at what, 130.38 high. The projection was 131.82. So we almost hit that first projection. You see them over, if it's big enough on your screen. I'm going to try something just so we can see if we can get this to work. Yeah, so you can see this a little better here in this window I put up. But we went right to this extreme right there. The projection was 131.82. High right now is the 132. I'm sorry, 130.82. So we're right off of that. But this pattern, no way to tell. Let's go and take a look at the weekly, see if there's anything there. Okay, weekly we spiked above the RTX number, which was 121.96. So we're above everything. There is no higher Fibonacci projection as well. It is, but we're seeing massive acceleration on the PPMs. PPM 1 plus 0.25, plus 190, and plus 67. And I suspect, I'm going to bring up WaveTech for a couple things here. I just want to see where, I just want to see something here real quick. Oh, I'll get daily here. I just want to see what we have on right now on the I'm actually going to bring up Portfolio Expert here. This is our other platform. Let's put so yeah, so we did get a buy in this thing. Let me go here to we did get a buy here on Nike. It's been long from about 100 after this big dip. So we did get that to come in. We were out during this. This was that cash thing, and then we got back in. So we basically eliminated some of this. But this trend now, this doesn't reflect the real-time quotes. It will tonight. But this is exactly where this was the breakout of Nike after the recovery. And it's doing pretty good now. We're at 130. So this is actually looking pretty pretty good as well. We could go here and maybe do an optimized daily. I'm not sure if there's anything there. Yeah, it's unfortunate. The daily just had a nice trade, bought it and sold it right before this gap. So that the short, but 3-2. Let's take a look at a daily 3-2 here real quick just to see what's going on. Yeah, so the daily 3-2 is long here from about 100. So it's on board with this thing. And like I said, now this doesn't reflect today's pricing, but that is definitely the modeling. We did pick this up pretty good. We had a nice buy here, get out, and when it broke out, we got back in again. And this is a short-term signal that's out there right now. So yeah, so just so you know, this platform is going to be available, I'm hoping, next week. I thought we keep running into snags on some of our releases, so I appreciate it. I should just say something when I know it's out there. But let's go back to TradeStation, take a look at some more stocks. We're looking at, let's go to Zoom. Zoom continues to zoom. I actually use the thing all the time. I don't like it anyway. I got problems with it. But anyway, here we are. The extreme 536.98, high 529. We had a 513 R3 on the grid. PPMs are just off the map. There's really not a lot of data on this. I'm going to go back over here and put zoom in this thing. And let me do an optimized weekly. I just want to see what this looks here. Yeah, so on Zoom, this is interesting. Our model's got a buy on January 31st, 2020. So we've been long this whole run on this thing, and this is a weekly model. If we go in and we put a optimized daily, there'll probably be some in and outs on this thing because it's going to respond to some of the noise. Yeah, we got out, then it gapped. Yeah, so probably the best model for this one is going to be 1.2. Yeah, that's going to be your model. And so right here we got bought it, got out here on 720, and then bought it back in on 818. And as long from 270 plus. And this is a short-term trade. The modeling that you want to do is actually the weekly, optimize weekly. Yeah, the other thing, if you folks want to find out how to get in, if you want to find out more about our software platforms that we do, just a quick break here for a second. But you can go to portfolioexpert.com, and at the end of the video, in the beginning, you'll also see ways to get involved with the WaveTech tool. This is but there's a lot of information here. There's support, WaveTech training videos. You can find out a lot about us there. And ultimately, if you want to go to, and pick up basically a very, it's $3.18 a day. You can go in and get the WaveTech tool, and you can get all of our signals on 16,500 stocks. So just a quick advertisement. A lot of folks that want to support this, that's exactly what's going on. So let's keep going. So Zoom is zooming, continue to move. Models are all still long. There's a lot of reason to call excesses, but we don't see them yet. And you're going to have to watch for reversal patterns on the daily charts to figure this one out. AMD has been another rocket ship, but we're finally coming in and starting to trade below the weekly 10-period moving average here. And just now that I brought this up, I'm gonna be bouncing back and forth. But let's put AMD over here, just see what the models are telling us. So AMD has bought this little breakout pattern. I believe that the 3-2 model is probably going to be better. We'll see here. Yeah, so that's usually your best model, 3-2. So we're long from 52 on this thing, but it's really going to start struggling here. It's getting sucked into the world of techs as well. There's just no way for us to get out of this, to break away from the main currents of the markets right now. Everything's going to be under. It is not in the TradeStation store. Those of you on the Zoom meeting and the live stream yesterday, a guy named Sam was on there. I don't know if he's around today, but we're going to be getting that thing up there finally. We had a couple issues, and the main thing that has been a problem is the market grid has been giving us fits and some errors that we can't figure out what's going on. In fact, I can't put it up right now because he's blowing up TradeStation. So we'll get that worked out here. So it's been kind of frustrating, but it's called programming. Okay, so let's go back to ES for a second. Just a quick look at the markets here. I just want to see if we have. I just brought up a 5-minute S&P. Yeah, the last sell signal we had to go short 32.69 on the futures. It's still short right now. We tried a long, had a couple good shorts today. This is a 5-minute graph, so but you see the PPMs on the 5 minutes just trying to signal a turnaround here. So I suspect we'll get an exit, maybe even get a long signal out of this 5-minute graph here in short order in the next 10 minutes or so. So we'll continue to kind of flop back and forth and see what we can find in there. Okay, so yeah, so tell me gold bounced off of that 62 number I talked about a little bit ago. I see somebody commenting on that now. What did it get down to? Yeah, low 62. So we're printing down at the lows here on gold. This is the point right here. If it's going to bounce, it better bounce. And I've got a 5-minute graph up here, so it's not going to be helpful. But this is, yeah, on a short-term level, we got a sell signal at 1949 or 1918 on gold here on a daily. So we definitely have some downward pressure. PPMs are accelerating. We're trading 58 now, so we're just taking out. And that's everything to do, as I pointed out here. We're going to go to DXY. Everything that you're seeing on the screen right now is all about the US dollar. It's strength in the dollar is what's doing it. We've had a buy and a sell and a buy. Looking at this a little choppy from a modeling standpoint. When we go to weekly, we still don't have a weekly buy. We are still short up at 98 on this thing. It's given back some of this trade, but I suspect that we'll see this thing turn around probably this week. And when we get a buy signal on a weekly basis, that's going to tell us that we're heading for that 200-day moving average. So gold, silver, the metals are going to be in big trouble as we go forward. There's not going to, it's going to be very difficult. And those who've been hanging around the channel for a while and watching, you know, I told you folks that after this, when market turned around on that Thursday around September 4th, the easy money is over, folks. This is going to be hard work now. It's not going to be easy. It's not going to be the markets are down and I open up an account and I buy a bunch of stocks and they go vertical. That's not going to happen again. We're in a different game now. Now it's going to be, this will be, it will be time for the pros, and you're going to need a lot of focus and be very careful with position sizing. The idea of going in and you know, loading up on a stock really big is going to be really dangerous here in this type of environment. And you know, and I this is a quick little side story. As I was going down the road the other day, I saw a guy about 32, 33 years old driving a brand new R8 Audi. Awesome, still had the paper plates. And, you know, I just thought, man, that guy bought Tesla. He made a ton of money and bought him a car. I was that guy in 1987. I had a 930 turbo Porsche that I bought. I called it my crash mobile. After the 87 crash, I bought that car. So, Jay's on here, my son. He rode in it plenty, didn't you, Jay? So anyway, that was the crash mobile. Okay. And so, but the thing that we have to remember here with all of this stuff is that the dollar is driving absolutely everything you see. The higher dollar is putting pressure on everything. And so including the interest rates. We're looking at the 10-year is up almost 2% today. So it's printing, it's still a low number on a relative basis, but we're looking at 0.67. And I talked about that and covered the 10-year earlier, as you're going to see this thing actually move back up to probably 0.9. So there's lots of headwinds ahead. And this goes through, if you've been watching my channel, watching the videos over the last several weeks, I've been telling you that September and October are not going to be at all like July and August, when all the reports came up and the optimism that the economy's coming back online. No, it's going to be different. The only thing that continues to look fairly good is real estate. And, you know, yesterday we got some number, or day before yesterday, no, it was yesterday, we got some numbers out, you know, that new home sales were, not new home, but existing home sales were up 2.5%. So you know, there's this big migration going on in this country, people moving out of, you know, urban areas to rural. You got half of California on fire. Those people have to figure out what they're going to do with their lives. You know, it's pretty brutal to be involved in anything like that, but it's causing this mass dispersion of people. And that's been a big thing that's going on for sure. Yeah, so somebody asked, why is Bitcoin holding up so well? And I'm not sure about that. It is interesting, I'll bring Bitcoin up, is that a lot of things that has happened with in the past, Bitcoin it's an asset on, it's a risk on, risk off. It was supposed to be, or it was perceived that it was going to be this counter hedge, right? Is going to be a non-correlated market. When the markets went down, Bitcoin would go up. Well, it's not working that way. And it's interesting, even with the strength in the dollar, it's not happening. And this is a weekly chart on Bitcoin. We're trading at 21 period moving average. That's got to be a broken record listening to this live cast today. Is just about every market is on the 21 period moving average. And there's reasonable amount of support. PPM 2 is up 0.72. So there's literally, this is the point where Bitcoin's going to support right around these levels. 10,106 is that 21 period moving average. So that's going to be exactly what's going to continue to happen here, is that's going to be support. Right now, you're looking at Bitcoin 10,000, between 10,000, we'll call it 100, and 11,050. That's going to be a trading range. And the market grid is well defined in the way it's trading right now. This will probably be the grid. So if you want to get these numbers down off the grid here, while I have them up, is the extreme 12,154. But these are going to be your support and resistance numbers probably for the next week or two. They're going to be pretty close to these numbers as we go forward, because the market grid has went into one of these sideways ranges, and maybe it will contract a little bit depending on what type of volatility. If we do break down, we could go down to the 40, be 9,064. That's possible, but we've got some really solid PPMs going right now, which tells you that's probably not going to happen. All right. All right, let's do, now this is kind of interesting though. There is some Fibonacci projection showing up here. And let me broaden this out just a little bit. Low target all the way down. That's pretty crazy numbers. Whenever these happen, it usually is not anything realistic at all. But 8,996 is the bottom end of the average, but the first projection is 5,860. I don't think that happens. I think this pattern overall is pretty solid. You're going to consolidate, see the PPM start to turn around on this. All right, I'm going to do one more thing here. This is Las Vegas Sands. There was a while back I talked about this capacity trade, if any of this stuff was going to come back online. And I've talked to some people who have been down in Vegas, and they've just said that it's really not been very very busy at all, and it's kind of eerie down there is what I've been told. So yeah, it's just been kind of eerie as far as being down there at all. But this pattern is interesting because we still have negative PPMs, but there is some Fibonacci showing up on this stock up at 63 to 79. It's just really weird, this whole 2020 thing, because you've got two new pro football stadiums, and Vegas being one of them, and that thing's supposed to be I've driven by it, and it looked like it was going to be spectacular. I guess it is, but none of these casinos, nobody can make any money in this current environment. And whether or not I saw that J&J is in the final phases of their vaccine, and so who knows? Are they going to have something out? Are we going to want to take it? I don't know. Are they going to force us to take it? I don't know. I'm not sure how I feel about any of those things. That's not what we're doing here on this channel, but those things are going to ultimately affect. You hear the Federal Reserve Chairman say it. It ultimately comes down to how this perception of, or the reality of how we get control of this pandemic, the COVID thing. That's going to be the driver. Now, maybe some of the pressure we're seeing right now is because of what's going on in Europe. I spent about 2 hours on the phone the other day with a friend of mine in Switzerland, and we were talking about it, and he said it's getting really weird there again. Not so much in Switzerland, but around it. And so I don't know what it is about the Swiss. They seem to have a magical touch for the world and life, for quality of life anyway. But the bottom line is that these things, whether it's the, we'll take a look at the airlines here real quick too, because I haven't talked about them for a while. You know, it's this whole capacity trade is still a question here, you know, and I think I called it right back in August when I said that September is going to be different. So far, it's very different. The housing numbers are there, but all the other numbers are just coming in really, really strange. So let's see here. Speaking of airlines, Delta actually traded back down. In fact, I'm going to bring up this. I have this portfolio. Those of you been around, maybe watch this stuff. Giving back some money on my Buffett strategy lately. We had a nice solid like 99% gain. It's now 84, and we went to 0 stocks in the airline portfolio. So let's take a look at the trade log on this thing. You're going to see right here, 921 sold Alaska, Allegiant on 921, 922 JetBlue, UAL, 922. That was today. We blew out of all these, and you can see 914. We kind of were in and out of SkyWest and all these, but the ultimate where we are right now is here. We have 0 airline stocks in that portfolio. You can see this equity line. It went flat. We got back in, printed up. We started with 50,000. We actually got it to 100,000, and now it's ticked back to 92.2. So still pretty good, but now no damage can happen. This is the perfect example when you're doing individual strategies and you're running a basket of stocks. This is where cash becomes king. If we look over at the open positions, there's going to be one open. This SkyWest was sold out this morning, so this will be tomorrow when we come in here. It'll be 100% cash. It'll show cash right now was 84% coming into today's open because of things that you saw. So you know, this is like I said, if you want to find out how to get this thing, it's $3.12 a day, and there's literally here on research, you're looking at 16,500 buy and sell signals, short-term, intermediate, and there's more coming because we will get through this issue on the market grid where all the stuff that you see here on the channel with the market grid and all those things are going to be available. Yeah, lots of loyal citizens out there. Yeah, that's funny. Yeah, so let's go back to some of these things. What time are we getting to be here? Half hour to the close. Yeah, Julian, I'm so jealous. My buddy lives in Lugano. I will move there tomorrow, but they won't let us Americans over there. So, yeah. Okay. Let's do another round here. Give me some stocks. Let me grab some more stocks. Things that maybe I didn't cover, you guys didn't get to a few minutes ago. Let's do some more stocks. And meanwhile, we're back at the lows on the S&P. While you guys are giving me some of those ideas, I'm going to go back to the level 2, and we'll just take a watch for this in a minute. Yeah, silver's good. I think I did silver earlier, actually. Yeah, those are good. I covered Apple, so that'll be there in a rebroadcast. And I did not do Amazon. Okay, did Baba. JPM would be interesting. Yeah, okay. All right. Yeah, there's some good ones there, guys. Thanks. Okay, let me do some of these. Yeah, look at this nice bounce off of here now. And we're back at 36. But as I've been talking about, these are these little humps that happen, new lows. Now this one, we finally didn't make. This is one of the first ones. Let me bring this up full screen here, just so you can see this. I'm going to draw this in because this, when you see a machine day, this is a 1 minute futures chart that I have right here. So this is actually a good chart when you have a machine day, when you know machines are definitely on the bid or the offer. Today they're on the offer side, there's no doubt. You can actually get yeah, actually get into this pattern here real quick. So yeah, so this is what I'm talking about. You get these little bounces and new low, bounce, new low, little bounce, new low. And this is the first time you can go all the way back on this timeline. And this has been the pattern since basically since we took out that 3256 level. And this is the first time right here that we did the bounce. We didn't make a new low, another little bounce, and we held that low. So there may be a pattern break. Maybe we'll start stair-stepping this thing back into the close with 30 minutes to go. So I just wanted to bring that up just for a second here. That'll be interesting to watch. We may finally have, this goes back to like 10:45 Pacific, so 1:45 all the way into the lows that we printed. This has been the pattern. So we'll see if we start to get the inverse pattern where we'll start to see these things start to get some unwinds of some of these trades. And as always, the last 4 minutes we'll spend together will be the 2 minutes into the close. I'll talk to you about how to determine some of the futures and the position sizing and what we're likely to see coming into the next day. Those are the most critical for me. That 2 minutes, maybe 3 minutes coming into the close to the first 3 to 5 afterwards are the primary things you want to watch if you're trying to get a feel. If you're really an index trader and you're just trying to get a feel for what's going to happen even in the overnight session. And with all this downside we have, what's going to be interesting with the overnight session, now we had 1.6 million traded today, contracts traded, so big volume as well. So we may have seen some sort of a climactic type situation. Okay, so let's go through some of these stocks. Let's do Amazon and just focus here as we get closer. So Amazon, here's another one as I talked about just a minute ago. Magical 21 period moving average. 2888 is that number right now. The low 2871, last 3000. So we penetrated through a little bit. But let me bring the sunscreen so you can see the market grid weekly. 2877 was S1, so we got to 2871, so we printed just through S1. R1 3032, the high 3133, so we basically have had an R2 this week. This is for the weekly range, so this is 3119 was R2, the high 3133, so basically an R2 S1 type pattern. So from a standpoint of any trading for the balance of the week, it's tough. But this market is going to be locked between that 21 and 10 period moving average. So we'll call it 2890, 3150. That's going to be your trading range. And I think if you're an option trader, you can probably put some verticals around those numbers and come in with some pretty good ideas. All right, let me do a couple more. This is JPM. We got the banks are under a little pressure, and they've traded down today all the way to the extreme. 92.92 is the STX. We printed 92.66. Last trade was just 92.92, so we were trading right at that number, and so that's we're at the extreme for the daily. There is some downside projections now for a move down to 81 on this stock. We got PPMs all are negative, rolling over. We're in a big time downtrend. The major resistance 106 to 108, and yeah, I'm just looking here. We're back at 35 on the minis here. Let me bring. I know I'm bouncing around, but this is kind of critical. So yeah, so we're definitely seem to be breaking the pattern. The low's been 25 now, and this is where we printed down. If we make a new high here, we're going to get a pattern. And I always threaten to teach you guys about the dragon formation, but this is a dragon that's setting up. So we'll see how this plays out. I think it looks like we're going to make a new high above this level here, which is going to be 32.39.50. If we get above that level, then we should start to see the market stair step as we come into the next 20 minutes. I don't think it's go a lot lower, but the key will be is that 32.56 pivot number that I talked about. If we were able to get a short covering rally back into that, to me it looks like we're trying to set up a rally here, and if we get that, then what we're going to see is that if we get back above that 56 number, that will still be it will be a negative day, but it's also going to tell us a little bit about the follow through tomorrow. And I'm hoping that tonight's video I'll be able to get out before the London opening, and it's that's my hope. And if we do, we will probably premiere that so that we'll have it out there so we can have some chat. I usually hang out when they come out at that time and all that stuff. But this will be critical right here for the rest of the session. So we'll keep an eye. I'm going to go back and do a couple more stocks as we get edge closer to the close here. Yeah. Wow. What is this? SPI. This thing's up 1,900%. Whoever asked for that, do you know what's going on with this stock? I have no idea. What is this? I mean, this is a weekly graph. Let me that's a wild day. This is a 5-minute graph here. Yeah, no doubt, rocket ride. Yeah, I don't know what there must obviously some news out around this thing, but this is just a 5-minute graph. It's the only way I could even see it. It was, what was it trading before? It was trading $1, and now it's 50, 44, $46 on the high. Okay. This would be, I don't know if it's in the database or not. Let me just see something. Yeah, unfortunately, I was hoping that we got lucky and got a buy on the models on SPI, but no go. Yeah, that's crazy. Okay, let's go back and take a look. I think somebody suggested we probably spend a little more time coming into the close today just because of the kind of day it is, and we will hang out and do just that. So let's get back to a daily chart. Looking at Neo, it's all these stocks, these tech stocks and everything are trading down at the end bottom of the range. This is just a giant vacuum sucking everything that looks tech into the hole. You know, we've got Nasdaq down 2.57. We're now seeing a little bit of a bounce here on the S&P 3650. But I tell you that number was 39 and change. 39.25 is going to be the point where we could see a nice little rally. It should be a fun hangout into the close. But there is some numbers here on Neo Fibonacci projections up here, 24.12, $27. And maybe that's a possibility there. This daily, if we go over to a weekly, might be able to see, yeah, this monster trend. So this type of volatility range, what we're seeing right here on the market grid, is actually going to be defining this market for a while yet until these PPMs can recycle. And we're looking at monster amount of upward momentum. So the 10-period moving average will probably come into play in the next 2 weeks. It's right now at 14.94. It's going up only 50 cents per week, but it will be up at around $16 here in the next couple of weeks. So I would expect if we did trade down into this grid, and let me show you that grid. So for whoever asks about that, you'll see that the 1686, 1607, we'll call it. We saw a S2 hit. This is a weekly market grid. 1686, 1607 would be super bargain on this stock, but it's really not going anywhere. It would be a trade. This is going to grind out. Whether this is setting up a major high or not, it's hard to say at the moment. It's definitely in this high-level consolidation. If you spend back about 4 or 5 weeks ago, I was telling everybody that we're going to go into this very high-level consolidation range. It was going to be broad and volatile, and that's what we're still seeing that unfold. And I'm just keeping an eye on the futures here. We've got yeah, it's funny. Somebody was asking about this, so you guys are gonna love this. I have the crystal ball. It's becoming. I moved it off screen the other night, and so we could put it in front and see if we can see anything. Doesn't work very good, by the way. But anyway, I know a lot of folks have been always commenting on the crystal ball, but this thing is just going to stay sideways. Let's do another stock. Time we got? Yeah, we got time for a couple more. That's pretty funny. Okay. Here is Peloton. I mean, it looks like a lot of these, we'll call them the COVID stocks, right? It's just crazy, you know. I don't know if this is valid or not. It's somewhat funny that people are spending all this money on these bikes because they're never going to go to a club again. I think somebody was saying it like $12 a month to buy a Peloton. I forget what the monthly subscription is, but it's a lot of money. It's like 30 30 bucks or 40 bucks a month. I don't know what it is. It's like 600, 400 or 500 bucks a year. Plus you got to pay, you know, thousands of dollars for the bike. You could actually like go to a gym membership for, you know, like 8 years or something. So anyway, good for them that I guess they're capitalizing on this thing. But this stock, maybe we can find something on a daily basis. We're looking at market grid is kind of locked in. There is some upward projection still on this stock for 105 to 121 is the extreme projections, and they're valid. They've just were generated the last 3 days. PPMs are still positive, 0.52, 1.67. These are all very strong trend numbers. So that 10 period moving average is going to be the magic number to buy against, which is 88 bucks right now, 88.15, but it is going up about $1 per day. So you'll be at 90 and then 91, 92 in a few days at this rate of change. So somewhere, if we look at the grid, there's probably a better range of buying. 92.68, 90.77, S1, S2 would be a place if you wanted to play this thing. But all these stocks are stalling here, and they're all getting sucked into this mess. So ES gave up completely. I think we're going to flop over and maybe watch this. So we're trying to print 25's low. We were unable to make that new high that I talked about over that 30. Let's say it was 39.50. Didn't happen. We took out the lows. Now they're trying to press for a new low on the session. And I mentioned this I don't know, hour ago or so when we were looking at the, when we were looking at the futures earlier, when we took out the 25 number, is that this is the machines won't let a day like this leave. That little bounce there was profit taking. They're leaning on them again. It looks to me that they're going to try to print another low. They're going to take this thing into the lows. It's going to be a pretty ugly close today. And that's going to set up the tone for, I mentioned several times that futures low is 32.17 for the week. They're going to press that low, it looks like, especially if we do go out really ugly. And so that, as I was talking about, so we're just going to stick with the screen here. I'm going to go off screen so you have full view of everything up there. And so we can get a full shot of this screen. But this is going to be an interesting close for a couple of reasons. We got the big down day. We're going to see if there's any short covering after the close. But if we do print new lows, we'll see how far we can go down. We're not far, as I said, 32.17 is a low. We could blow the lows out today, actually. All right, here we go. We're setting up for a reprint of the lows. Three ticks, two ticks. Here we go. Wow. Wow. You guys watching this? This is crazy. We printed a new low by a tick, ran all the way 3 handles higher, and then back down. There we go, new lows. I think they want that 17 number. $23, $22.75. They print 50s here. Here's the bounce, new low, bounce, 150, back down. Yeah, we're 10 minutes out from the close right now. Yeah, I think Alan had a question that what would define when the machines will stop trying to reprint lows today, tomorrow, when right now they're in control from the standpoint of everybody's leaning their way. Anybody that's traded for more than 3 weeks knows not to get in the way of this thing when they get into these modes, especially when they take out the big pivot number. That 56 number was a big number. So we printed 250, we're 3 handles up. But if you look at the chart pattern that's forming here, these all these lines that I have on here, and like I keep saying, one day I just need to do a live stream, but not until we can get this stuff on TradeStation so you could have this TSW set up. Here we go, new lows setting up. 50's low. Here we go. Printed 50s again. Yeah, but what I was talking about here is these lines. They're linear regression lines, and these aren't proprietary stuff. Here's 50 prints again, the low prints. Keep getting a bounce about 75. Here we go again. New lows, 25's print. Yeah, they want the 17. There's 22, new low. 32.17 is the low for the week. So just like that, we printed, by the way, we printed the entire range of the week today. That's what kind of reversal this has been. Here's 2150 prints, new lows. So we had a high of 33.19, and right now we're printing a low of 32.21, 100 handle range today. And still print. There it is. Prints low, 25's print again. And those linear regression lines, when they're this is a downtrend pattern. Until we're starting to get some crosses on there, there's a chance for this thing to set up a little minor bottom here, but there's just way too much selling coming in here. Here we go again. Print 50s, 25 low. There's new lows, 21 even. There you go again. Prints 21, trades up 22, 4 to 6 ticks higher, and then they're right back to trying to print the lows again. There we go. So 21 new low, 17 is the weekly low. So they're just not done with this thing yet. As we're coming into close now, we got less than 6 minutes to go. 21's low, trades 23.50s, 24. So we're getting some crosses on the webs right now, which tells us there's a shot there that maybe that was the low right there, 21 even. Yeah, listen, these bank stocks with interest rates, the dollar going up, all kinds of stuff. There's a lot of risk in this market right now, folks. Somebody said cash is trash, cash is king. If you can't find something really clean to play, it's just you're better off to be watching this stuff. And the short volatility, by the way, when you go short something, has about twice the volatility as a long trade. Volatility, I mean price movement. So we traded all the way up to 24 and change. Let's see if they are going to let this thing go. We got 4.5 minutes to go to the close. We'll stay with this screen, and Why not bonds? Because rates are going to go up right now with the dollar going up. What you're seeing is liquidation of bonds. That's why you're going to see the Treasuries pin up 0.9. That's about a 10-15% move in yield. It's going to crush prices. You don't want to own bonds. Sometimes you want to own bonds, but not right now. You don't want, it's like owning whatever Tesla's high. It was like buying the split on Apple. You don't want to be looking at that kind of stuff there. There's a right time to be in bonds and a wrong time. Because if you think about it, it's not always a protection. People think you put 60, a lot of advisors and people out there think you just put 60% in stocks and 40% in equities, and that works. And when we get done with the close, if we'll spend a few minutes, I'll show you what a bad idea that is. I tell all of our advisory firms, never ever do 60-40. There's a video on my channel that says why advisors should never do 60-40. Yeah, so 21 might be the print low. We got a little less than 3 minutes to go here. And 21's low, trading 24. We'll see what happens here. This is going to be critical. A couple things that we're going to see happen in that we're into that mode right now in the futures where we're going to see a lot. This is the institutional moment. So if you're institutional, and institutional traders doesn't mean smart money versus small guy money. This is mutual funds, ETFs rebalancing, all of the stuff that a lot of people play. They've got to balance. They're getting buy and sell orders all day, and they have to rebalance all these funds. Most of this stuff that you see coming into these last few minutes are rebalancing, and you'll get an idea of this is why it's important to watch, in my opinion, is that when you watch this place right here, what we're about to see, you start to see what kind of rotation. Now we should see, even on a day like today where there's not a lot of liquidity, you're starting to see some numbers show up. We are right now we're down under 2 minutes. So if you're on a trading floor, you've already had the 2-minute bell ring, and the 1-minute bell is coming here in a second. And you'll see the size on the bid ask and on the bars on the far left hand side. You're going to see the numbers will get up, and on a normal day they'd go into the thousands, but we're lucky to see we're seeing some 200s and things print right now. We are in the final minute at the moment, so you're going to see a lot of erratic trading, but this is where everything gets squared up. These are orders that were sitting in there waiting for that final closing minute on the cash, and then two things happen. The S&P cash is going to get a runoff, so you'll see, gee, the market close, why is the S&P still changing price? Because that's all what they call the runoff, all these final orders that come in. And then what we're going to be able to see with a big down day like this, to see if there's any short covering. Now we're literally seconds away from the close. It was actually pretty stable close down here, but as soon as the bell goes off, we should get a pop up on the screen. I think it'll come up here in a second. And yeah, we're seeing decent size. You can see the over on the right, this is the volume rate of change of volume. You see volume increased substantially. There it is. Okay, we're closed, and now we want to watch and see how this thing is going to go. So we'll keep this. We'll go full screen here so we can watch this together. And looks like a little short covering trying to come in. Trading 27s. So what happens is you get the orders back. If you're institutional desk, institutional trader, you're getting back what you got filled on your cash, and now you got to look at your futures and see if you're out of balance, and then you're going to buy back any net shorts or whatever are on there. So that's why you'll get they're basically front running their own order flow. So not a lot here so far. We're 1 minute after the close. We're printing 29s, so we're up about 5 handles right now, maybe 6. So we're starting to see a little acceleration. These guys are figuring out what they need to square up, and yeah. So here's 30s printing. So a little short covering, about 5 handles, not a lot, but this could continue, and we probably will see it continue to recover here as we go into the evening session after a big day like this. So we had a 2% down day. Okay. I don't see much more to watch here. So we covered a lot of stuff today. It was a pretty busy day, so the market action actually kept us a little distracted there, I would say, just because there was so much going on. Yeah, it's folks are asking, does it seem like tomorrow will be another down day? That's, you know, my normal style here is what I do after a day like today. You don't want to, when you see a big down day, you're going to think down day again just because of what you experienced. So it is 1 o'clock on the West Coast. I will step away from these markets for multiple hours, 3 or 4 hours. I've got other things that I do with in the afternoon. I will do those things, and I'll come back and try to clear my head out and figure out if see how all the technicals look and what's set up on the PPM. Sometimes when you step back, you can really keep somewhat of an objective idea. Thanks, Supa. I think that's your second super chat of the day. So thanks a lot. Appreciate that. But the patterns that you see sometimes can be very influential. So you have to step back, you look back, and you try to come up and to stay objective. And it's very hard when you're doing discretionary trading. And this is why I built a quantitative platform. That's why everything that I've done in the past have been about having quantified decisions that are important to watch, and that just keeps me, I guess, focused and not being able to get emotional, because that's where folks get in trouble on the markets, as far as you end up getting emotional, and that causes you to do really not good things. So yeah, so we basically stabilized between that 25 close and that I think it was around 29. We printed maybe 30. Trying to find something here. So we'll start winding down for today. I really appreciate everybody spending time. We had a lot. We still have over 1,000 people watching. So thanks everybody for joining. If you haven't, if you haven't subscribed to the channel, do so. Smash that like button, all that kind of stuff. Let YouTube folks know that we're doing a good job and doing something you guys are interested in. And there's plenty of ways to get involved with us. You can go to the kendallreport.com, give us an email address. You can go to this page here, Kendall Report /wave-tech, and you can get to a a screen to find out how to get our software. You can also just go to portfolioexpert.com and see and peruse the site there. There's some videos that are available to everybody on the channel there to be able to do what you need to do as far as that stuff goes. So anyway, let's see here. Yeah, 1,000 likes would be good, huh? I'll hang out with you guys for a few more minutes. Yeah, so Mark, bonds aren't bad. They're just not good right now. If you have that, bonds have actually been really good this year. So don't take me that I'm saying that bonds, I'm just saying there's a right time to be in them. And it's just not, if stocks are going down, you buy bonds. That doesn't always work. Bonds and stocks do go down together in the same direction. And they also, they'll work counter at times. And there was something I said I would show you folks. Let me just see if I can find something here if I can very quickly. This is yeah, I found what I was looking for here. So I'm going to bring up our portfolio expert, and let me get rid of something here. Okay, so on this chart that I showed you, I was saying earlier that this is why the 60-40 bond thing. So we'll finish the show today on this. As this chart shows us exactly what you would have done. The pink line is the S&P 500, and this is going back to 2003. And I believe I can go back to 2000 if I wanted to go back further. It gets more dramatic. In fact, let's do that real quick. It'll take me just a sec. I think I can do this. Yeah, so we'll leave it. This is the so the pink line is the S&P. The blue line is the 60-40, and the green line is when you take a 1% fee out, when you take 1% fee out. And the difference is, you think this is going back, what, 17 years, that it'd be, 17% would be the difference. It's actually not. It's actually closer to 38% when you break it down. So if I take the S&P off here, you'll see how dramatic this really is. And so the blue line now is 60-40, no fees. The green line is with fees. So during the same period from 2003, you would have made 170% on your money on 60-40. But if an investment advisor does it for you, which about 85% of everybody out there, that's what they do. They don't do much. They do planning, they do a lot of other stuff, but this is their investment strategy of choice for the most part. And this also rebalances every year. So really what you're looking at 170 versus 130, it's actually right at, matter of fact, it's gotten a little worse. It's about between 38 and 42% difference in 17 years. That's a lot of money. That's a lot of money. And so you have to, if you happen to be an advisor and you're on here, I'm telling you right now, you've got to do more than that, because this is not value. And that's why we have this portfolio expert and our institutional side of our business, because that's exactly what you want to do from that standpoint. And yeah, so so make sure, I just want to show you that, because people often think that is the bottom line. So here's a way to get into Wave Tech. I showed you the portfolio expert. This is the way to do it. I know I'm doing it. I still have almost 1,000 people watching. So I just want to show you this stuff, because this is how money is managed on a very dynamic basis, not on a buy and hold. And we've been teaching everybody how to get our products, how to actually manage baskets of stocks and not just be individual stock traders. There's nothing wrong with that. It's just that some of the money, we want to help people, 401ks, retirement money, and some other stuff. So you kind of nestle money away over into this other category. And that's really what we're trying to help people do. So, that's one of the things that is pretty important to do. Yeah, and actually, that's not including taxes. That is correct. On the top one, if you buy and hold it, there are no taxes. You only have fees. So there'd be no taxes unless you're buying and holding. On some of the rebalancing, you would have some. If I go back to that screen real quick here, if we go back to this screen, you would not have. This would just be buy and holding for this period of time. But the rebalancing, there would be some minor tax implications there. And especially the way we've set it up is it rebalances once a year. But it really is to illustrate that when it's like going to a casino and they keep taking chips, they keep taking their commissions. What they're doing is slanting the odds to make sure you lose. That's why, Vegas is a city of for losers, not for winners. Some people do win, but most lose. And I lived in Lake Tahoe for a while, and I knew some people at the casinos, and there's some standards on their slot machines, and they're gambling. The states regulate them, make sure they're just not stealing money from, grossly stealing money from the public. So as long as they can show that they're actually distributing money back in certain areas, they become legit. There's actually metrics on a casino on how much money they can on their ratios and what games win and what they don't. And now with the digitized world, if you go to Vegas and go buy a roulette table, it's like watching the stock market trade. A buddy of mine, Steve Kalajian, and I were standing in Vegas. He's a long-term trader like me. He owns a company called Ticker Talker, and we were standing there looking at this thing, and we were trying to figure out how to get a device out and start trading this board that was the line. But anyway, so yeah. So anyway, folks, I really appreciate everybody watching. We got chat a little bit, a little fireside chat. I'm gonna call it quits and thank everybody. Thanks, Garden Chick. Appreciate it. And yeah, we'll see how everything works out for tonight's video. So we're coming into that home stretch of the week of Thursday and Friday. So I'll try to set up everything tonight. So thanks again for watching. We'll talk to you folks. We'll be talking to you folks tonight via video. Thanks again.